Hello, everyone. This is Tom Fox back for another episode in our series on the failure to prevent fraud offense of the Economic Crime Transparency Act. Today, I'm thrilled to have with me Vince Walden, CEO at Kona AI. Vince, welcome to the podcast.
Hi, Tom. Super glad to be here.
Vince, I think all of our listeners know you are not a lawyer. And that's the reason I asked you to come on, because I wanted the fraud examiner side of Vince Walden to maybe educate the U.S. public, or U.S. companies rather, on the types of fraud offenses that are covered under this act, because it codifies under UK law some offenses that have been around a long time, but perhaps were not as easy to prosecute. So, could I ask you to maybe, looking at this from a fraud examiner or a CPA view, what do you see in the offenses that are covered under this new part of the Economic Crime and Transparency Act?
I definitely see, and let's go through some of them by topic in a little bit, Tom, but at a high level, when I see these offensive, it's anything with around vendor interactions. If you're paying third parties, in your accounting words, procure to pay process, from vendor setup, due diligence, to payments and delivery of services, it's things that you're responsible for what your employees are doing, who they're entertaining, and what third parties they might be doing. It's more fraud with respect to external interactions around that. And then even customers from a bidding or bid rigging or collusion type perspective, I think it's in that abusive position. There's so many different categories. If you look at the fraud free, and again, I go back to the Association of Certified Fraud Examiners, fraud free. The three main categories of fraud are corruption, asset misappropriation, and financial misstatement. And I think there's an arguable case that you can align, and again, within those three main categories, there's about 50 plus schemes underneath those categories. And I would almost argue that you could map pretty much all those schemes, or most of them, to the UK Economic Transparency Act. It's pretty broad in its covering.
So, one of the things that I'm trying to do in this podcast series, Vince, is help U.S. companies understand the risk they face by failing to have a fraud prevention compliance program. And I've talked to a couple of UK practitioners, and they have made clear that the reach and scope of this act is as broad as it can be. It certainly applies to
Yeah.
UK companies. It certainly applies to fraud which occurs in the United Kingdom, or an email about fraud that happens to go through a UK server, hint, hint, like the FCPA, but also to US subsidiaries of UK companies, because the profits of fraud engaged in by the company would roll up to the UK company's benefit, and that's enough to obtain jurisdiction. And then there is fraud committed by US companies with UK subsidiaries. As you come out of the energy industry, and every energy company in the world has a UK presence because of the North Sea. And we haven't even gotten to pharmaceutical, to tech, to any of the other major US companies. So could you maybe say a few words about really the breadth and scope you see, and why US companies need to not simply be aware of it, but be ready to respond?
With two stories on this that you'll love. One, God, it was 10, 15 years ago, and I've never forget this. It was a Wall Street Journal article or something. It was comparing New York to UK. And America, for folks in America and globally, you can appreciate this. The article, it talked about that this one thing. People come to New York to do business in the U.S. People come to the UK to do business around the world. And I thought, what? That always stuck with me. And of course, both cities are huge, wonderful cities, and they're always global, of course. But really, people come to New York to do business at the U.S. markets, or have a place there, or big cities there. But people go, UK is truly a globally integrated network and the financial hub of everything, not U.S., I would almost say, or Singapore. But think about that statement. So when you think about the scope of this act, how many Fortune 1000 companies do business out of the UK? And I would argue probably all of them. So this applies very broad in scope, not just UK-based companies. The other concept I want to get across was one of my software companies, a big company based in the UK, originally thought that the act was related. Oh, that's just for the external auditors. That's for the auditors. We don't have to worry about it in compliance. It's an auditor issue. It's an accounting issue. And I thought, I disagree. And I talked to lawyers and also lawyers, but I couldn't seem to convince the client. I was at an ACA, an FCPA conference in New York 2 months ago, a month and a half ago maybe, I think either May or June. And they had a speaker from the SFO on the panel. And I'm not going to give her name, but she spoke. And after the panel, I went up to her and I said, look, don't know who I am. Just very generally speaking, I have a company, UK-based company, a client who says that the act is primarily for accountants and not for compliance. And she looked at me, and forgive me for saying this slang word, but she looked at me in all seriousness. She goes, "You've got to be batshit crazy if you think this is for the accountants. This is absolutely for the compliance and legal professionals to have an effective program in place." And I'm like, say no more. I wish I could quote her, but I can't. But that really brought it home for me. This is absolutely a compliance topic around having adequate preventive and detection measures in place. And that introduction, section 2 of the paragraph, may be criminally liable when an employee, agent, subsidiary, or other associated person commits fraud intending to benefit the organization, and the organization did not have reasonable fraud prevention procedures in place. That is why I get so passionate around leveraging technology, and why we're doing, my company, Kona AI, is having phenomenal growth in UK. In fact, we're working with almost 25% of the top 15 companies in the UK right now.
Vince, in addition to those words that I don't think we'll forget about why this is a compliance issue, the UK Home Office issued the Economic Crime and Corporate Transparency Act 2023 guidance to organizations on the offense of failure to prevent fraud. And indeed, they have an entire section on reasonable fraud prevention procedures. So they have specifically told us they expect a compliance program in place. They expect reasonable use of that compliance program, and maybe we call it fraud compliance program, and that's appropriate. But there's several points in there that really struck me as a data and data analytics framework would help that. And if maybe I could just start with, what would be the basics of data analytics in a fraud risk management program?
I always like to say data analytics does not start with data, which sounds counterintuitive. Let me say that again. Data analytics does not start with data or analytics. It starts with your risk assessment and your fraud risk assessment or your enterprise risk assessment. But being able to demonstrate to a regulator, it's just like DOJ and how they do evaluation of corporate compliance programs. You need to be able to say, here was our risk assessment that was done, a reasonable risk assessment. It identified these fraud risk areas. We then developed preventive and detective controls around those fraud risk areas, which means what are the data sources that give you insight? What are the transactions? What would give us insight into those risks? And then what did you do to implement a program or a process to monitor for those risks going forward? If you can do that, you have got a defensible program. It's when you don't, when you just say, oh, we run a couple tests here, or procurement does this. The first line of defense, I'm sorry, that doesn't count. Who's overseeing that? When you're able to say, here was our risk assessment, here are the controls that we identified, or the risks that we identified, how we pulled data in to give us some level of insight and action into those risks. And now, if you want to get fancy and how we're using AI and machine learning to continuously improve the model, just like the ECCTA in the US says you need to have an F1 score, a precision and recall measure, all those things further strengthen that message. But boy, if you don't have that process in place, if you're not doing a fraud risk assessment, can't map it to the tests and data and have some analytics, you're going to be you won't have, that's not defensible. Again, says the accountant, but to me, I don't buy it.
It's many years ago, you and I were on a panel together, and you took the side of P2P or procure to pay and a fraud risk analysis there. I took the quote to cash side. And I was focused on bribery, but listening to you, I'm beginning to think you are equally at risk for fraud in the quote to cash side of things, and that you need to look at that from a fraud risk analysis as well. Would that be a fair assessment?
Sure, buddy. If you think about it, And again, for your audience listening, if you think about your business, there are only really three entities that can rip you off, if you think about it. Now, put cyber away. This is not a cyber conversation. It's not outsiders, state actors, etc. But there are really only vendors, which, again, accountants call them vendors. Compliance people like to call them third parties. There's employees, which we all can agree works for the company, or affiliates. And then there's customers, or depending on your business, that same customer might be considered a distributor. Or, again, some people call them third parties too, but in the context of vetting. But there are vendors, employees, and customers. That's it. And vendors, that's procure to pay. Employees is salaries and travel and entertainment expense. That's how money moves there. And in your order to cash process, you're giving away discounts, free goods, returns, receivable, issuing credit, etc. There's risks around the sales process. But if you can design fraud preventive and detection controls around vendors, customers, and employees, you pretty much got it. Again, separate from your cyber risk programs and your data privacy. But again, data privacy, that's employees and that's outside risks, even vendors, etc. But thinking about it, keeping it simple, vendors, customers, and employees, and designing fraud risk controls or controls around that is a very defensible program.
It's when I think of a compliance risk in an anti-corruption area, I'll think of a high-risk jurisdiction. And you name the country, as specified by the Transparency International CPI. But when I think of fraud risk, I fall back to the fraud triangle. Is that the starting point we should be using for our fraud risk, or are there data we should be using to identify fraud risk?
I think looking inside your company first and foremost as a fraud risk indicator, doing employee risk surveys. And I like to think about the types of data that compliance and risk professionals have at their fingertips without having to go to ask IT. They have access to the surveys. They have access to the hotlines. They have access to the investigations data, what's going on there. And of course, enriching it with Transparency International and World Bank data and other types of external sources and media makes it even better. And then of course, enriching it further with transaction and actually really what's happening in the business makes it even better. But in terms of how that works as a fraud risk management, fraud risk program, that's kind of the key. Did I answer your question? I'm not sure if I answered that question very well.
You did,
Okay.
But I wanted to follow it up with, I understand that. Now, how do we move from that information you have just generated or you have presented to us as potential fraud risk or areas that for more investigation into a risk-based fraud prevention procedure and then the monitoring and ongoing improvement?
Yeah, from a compliance monitoring perspective, I like to think about it. This is a business process. So your fraud risk and your compliance monitoring is not a project. And I think this is a concept I want to get across to your audience too. If you think about going out and hiring consultants, that's a project mentality where you go and hire consultants, they do a fixed job, they deliver the report and the results, and then you're done, and then that's it. Compliance is an ongoing, it's a business process. So and that's why I left consulting to start my software company, because it needed to be a continuous process. And so when you think about the data inputs mapped to your risks, so around, like I said, vendors, customers, employees, we've developed libraries of hundreds of tests, really exciting, around the fraud triangle, around the fraud tree. We also look at, like you mentioned earlier, the fraud triangle, doing that brainstorming exercises. Where in the company is there pressure in the organization? Maybe layoffs have happened or downsizing or whatever. What are the opportunities? Where might there be control weaknesses? Look at the internal audit report. Where is perhaps in the business there might be a finding of control weaknesses, of internal controls? And then the hardest part, again, which is why email is so popular and in investigation, but what's the rationalization for those individuals to commit the fraud? How were they internally justifying that what they were doing was right or acceptable to them, which is why they did it? When those three come together, that's where you can see your fraud risk areas. And we like to use data to really point out those anomalies.
Vince, as you well know, any part of a best practices program is going to have an investigation component if an anomaly is detected. How does the data which detects an anomaly help the fraud risk officer or prevention officer then move to investigate?
Yeah, let me talk about this concept of risk scoring. And then let me tell you how excited I am about the future of how we're going to be using generative AI to do this. But traditionally, best practice, and again, I would say my software does it, even the consultants do it, is you come up with your list of tests. Some people have 10, 20 type of tests. I have actually 1,000. But you come up with your test and you say, all right, you risk weight it. How important is each test based on whatever fraud risk category you're interested in looking at? And then you pour 100% of your data through those transactions. Gone are the days of statistical sampling. If you are sampling transactions to look for fraud, you are absolutely outdated and it is a waste of time. Stop. Sampling doesn't work. Sampling might work for audit processes. It doesn't work for fraud detection. So you pour 100% of the data in. Now, when we do risk scoring, you say the lowest common denominator is a transaction. So show me a transaction that hit on not just one risk trigger, but multiple. So show me the transaction that was round dollar, paid out on the weekend, hit on a sensitive keyword that bypassed due diligence, that was statistically anomalous. I want to look at that transaction because it hit on multiple triggers, right? So I can take 200,000 invoices or payments and risk score them from 1 to 200,000 based on those multiple risk triggers. They'll always sort. And then I'm only looking at the top 10 or top 20. And the nice thing about a payment is that you can always map a payment to a vendor and a vendor to a business unit or company or a general ledger code. And so you could do these amazing roll-ups and dashboards if you're just scoring a transaction. We come up with beautiful dashboards and beautiful risk ranking models to say, look, you don't need to look at 10,000 transactions. Just look at these top 10 riskiest. And then if they're all 10 risky, then probably go view another 10. But if they're not, you have some kind of measure of comfort that things are working appropriately. But that's that risk scoring. What's changing now, and forgive me for this long answer, Tom, but this is where the future is. In fact, my company, Kona AI, just merged with a company called Covisint, which is an agentic AI company that builds AI models. But being able to build a language model, but not just a language model, but a language and transaction model that will allow companies to upload their policies and docs, but be able to ask the agent, not a bot, but the agent, questions on their data such that, imagine this question and imagine the data that goes behind it. Easy question. Most companies can do this. Show me the policy. What is my expense policy for requiring signatures on an invoice or whatever? Okay, fine. It'll be over anything over 25,000. Any bot can do that. But then show me, now that you know that it's 25,000 is the threshold, show me any transactions in the data where that expense policy is violated. Now, that requires text going to SQL to come up and give you that answer. That is huge. That's currently not being done. And companies like Kona AI, we're building those for our customers so that you can have a conversation. Hey, where are my highest risks? I'm doing an audit in Brazil. Where are my transactions? Or show me any vendors that are out of policy for payment terms or for anti-corruption, or show me my highest risk transactions or vendors. You can ask these free-forwarding questions and then say, why are they? It looks like they're violating this policy, or it looks like very similar to a previous ECCTA case that that the DOJ had investigated. You can ask some really interesting questions, and the dashboard, the bot is pushing the dashboard. You're not having to click around aimlessly. That's the future, and it's really exciting.
Vince, I'm going to go out on a limb here because I say effective compliance equates to more efficient business processes, equates to greater profitability. I think I just heard you say that from the fraud risk perspective, but I don't want to put those words in your mouth. Can we actually improve a company's business efficiency by having a robust fraud risk management program?
And I'll tie this back to the topic of the UK, the Economic Crime Act, too. The answer is absolutely yes, because there's nothing more fun than finding hidden money. And again, the purpose of it is not to recover funds. But when I look at, again, it's funny, Kona AI, we've processed over $1.4 trillion of our clients' data. We work with many, over Fortune 500 companies now. Of that, little statistics for you, only about 450 million has been tagged as risky or follow up or were investigated out of the trillions. But so it's always a small percentage, but being able to then take that and say, hey, this violated policy, this was simple things like duplicative, but hey, this was in fact an overpayment or a kickback or a bribe or a conflict of interest, all sorts of things that we can find when we do this type of methodology, and then we use AI. And from a machine learning perspective, as you tag those high-risk transactions, the machine learns. Just like an email, when you say, find me that smoking gun document, and say, find me more like this, here's a transaction that it had the word friend fee or special payment to a government agent or even to like some intermediary, and say, find me more like this. Same type of math. That's that precision and recall score that goes on continuously, and the system continuously learns. So and again, going back to the act, when you're able to demonstrate that as a process, I go back to, can you have a reasonable fraud prevention procedure in place? Absolutely, when you can show them that.
Vince, fortunately, we are near the end of our time for this episode, but it's been a great visit, and I hope we can continue this conversation.
Thank you, Tom, for having me. Always a pleasure.
Compliance Podcast Network. Start your mornings with daily compliance news, quick, sharp updates on the top compliance and ethics stories in under 5 minutes every morning in Compliance Podcast Network. Because compliance never sleeps. Need practical advice fast? Check out Compliance Tip of the Day. One actionable idea to level up your program. Short and sweet, every day on Compliance Podcast Network. Got 10 minutes? We've got the week's top 10 stories. 10 for 10 brings you the big compliance headlines. Fast, fun, and focused. Every Saturday on Compliance Podcast Network. And don't miss the Sunday Book Review, where compliance meets culture through must-read books and big ideas every Sunday in Compliance Podcast Network. Whether you're in the office, on a walk, or commuting, stay smart, stay ethical, stay tuned. Only on the Compliance Podcast Network. Available wherever you listen to podcasts.